But because we invest so early, for us, team is super important. Sometimes we've made bets where there wasn't a product, there definitely wasn't revenue. And so at that point, all you really are betting on is the person and the opportunity.
What do you wish more first-time founders knew before going into that first pitch with you?
For your pitching, you have to remember that
You majored in computer science, you worked at Postmates, you worked at BlackRock, you worked at great companies where you're actually, software engineering. What message and advice do you have for people who want to get into coding that don't have the background and so they kind of feel like, oh, I can just go on Cursor, I can go on Replit, I can go on Codex, and I can build what...
if I was to go about trying to learn how to code
Yeah.
in 2025, I probably would be doing like, at the end of the day, a VC cares most about
This is the one and only Lauren Reeves. She is a principal investor at MGV, an early stage B2B SaaS fund that's based in San Francisco and New York City. She's technical by trade. Her path into venture comes after starting her career as a software engineer at places like BlackRock, Postmates, and Alto Pharmacy. She's a very big deal if you didn't know. Outside of work, she runs a blog on Substack, and she's an avid proponent of all movement: music, dancing, running, everything. And Lauren has also been spotlighted by Women in Silicon Valley, Girls Who Code, and Forum Ventures' top New York City founder first investors. And of course, she is my sister. First and foremost, can you actually just explain to people what a SaaS fund is? Really break down what MGV is.
SaaS is just an abbreviation for software as a service. And so so in the intro, when it says B2B SaaS fund, that means that we're investing in companies that are selling software to businesses. So businesses selling software to other businesses.
The services that you guys go after, is there a certain niche that you prioritize, or is it really just anything that comes across your radar?
For us, we're a generalist fund, which means that we don't have a specific sector that we look at. But I will say that, typically a lot of generalist funds will have trends. So maybe 20% of our portfolio is actually health tech and 20% is fintech. There's a decent amount in there that's sales enablement tools. So we look at pretty much everything, but we definitely have categories where I think we've placed a lot of bets. And this is pretty common, I think, with other funds as well.
Interesting. Okay. Really good to know. So a lot of my community, a lot of people listening to this are developers, aspiring founders, etc., who are wondering what to look out for, how to pitch VCs. So from your perspective, what are the biggest red flags that you see in early AI startups, just early SaaS startups, when they're trying to pitch VCs as a founder?
So one of the kind of big flags I see with AI startups is people pitching AI for the sake of AI. So I think one of the biggest things that we look for is, are you still trying to solve a real problem? Some people say this is just an AI startup, and it's just okay, but still what big hair on fire problem are you trying to solve, and are you leveraging AI to are you leveraging it in the best possible way to achieve that? So for example, AI is really good at pattern matching. So are you using that sort of behavior in your solution?
If you had to explain your day-to-day job, what does that look like for people so they can kind of have the inside knowledge of what it's like to be a VC?
Great question. I feel I'm laughing because I don't think any day looks the same.
Yeah.
But kind of the things that I try to do every day. A lot of this job is networking and sales. So I will probably start my day with a coffee, catching up with another investor, just seeing what they're seeing in the market, talking about what I'm seeing, how we're thinking about different things. From there, I might be outbounding to different founders, trying to say hey, would love to chat. One of the things that we do as investors is hear a lot of pitches every day. So one, I have to find people to pitch me but also spending time listening to pitches, reviewing, looking at the market. So a decent amount of my day is actually spent either outbounding to founders or listening to founders and their ideas. There could be a portion of the day where I'm doing research in the market, so understanding more about the competitive landscape or how big of an opportunity something truly is.
Let's just say I'm a founder. I feel like I have a really, really good product, a really good SaaS, etc. This is kind of a two-part question. One, what's the best way to put myself out there so you notice me and so you either reach out or you feel comfortable with getting pitched by me? I feel like that's kind of like the first question. And the second question we'll answer it after is, what are those early traction signals that you're looking for to, well, that just get your attention, whether it's revenue, whether it's users, whether it's MRR. So two-pronged question, but curious of your take on that.
Yeah, so your first question is how do you put yourself out there for me to want to reach out to you?
Exactly. Like if I'm not located in New York, how can I still get your attention as a venture capitalist?
Yeah, so I think there's this trend right now of building in public where, people are sharing what they're working on as they're working on it. I think that that's a big thing to get someone excited or like in a way to look for you. If you're constantly working on an idea or like tinkering something, sharing learnings, sharing what you're building, sharing the traction, sharing that you've got users, sharing that your product is now live. I think that's one thing.
Any platforms of choice that you feel like would get your attention more than others?
Yeah, so there's a couple of ones. I think like Twitter or X was probably like the OG.
Okay.
And there's still a lot of VCs who hang out on Twitter. I think also, LinkedIn is a big thing. There's actually a lot of scripts that VCs have running to track when people change their jobs. So if you're saying like, oh, I'm building a stealth company, there's a lot of investors who actually have alerts set up for that. And so, there's a joke that says, I think like the easiest way to not be lonely is to update your LinkedIn to say that you're working on something new. But I think there's also hubs of just like different products coming out, like Product Hunt, for example, I think has some really cool releases. And so sometimes people might spend time on there looking for products. So really, I think if you're trying to be seen, one, it's about putting yourself out there, almost doing it like an annoying or ad nauseum amount of times. They actually say on average, it takes 5 times to close a sale. So you have to just like constantly be putting stuff out there.
Exposing yourself for sure.
Yeah, especially if you want an algorithm to pick you up. So I think there's that, but also going places where other builders are online, whether that's Twitter, X, LinkedIn, Product Hunt, Reddit, etc.
Yep, I love it. So now let's go to the second question of what are those early traction signals that definitely get your attention?
Different things will probably catch my eye. Usually though, revenue is always super exciting. So if you're saying like, hey, I went from, this is an easy one, but if you're like, oh, I went from like 0 to 3 million, people are like, whoa, what are you building? But because we invest so early, for us, team is super important. And so, just seeing a person, maybe like other places they've worked, projects they might have put out, different types of impact they've had at different companies, like those are the types of things I think that gets us excited, is just signals of better understanding someone's work and what they've created in the past.
Interesting. So even if somebody hasn't even necessarily launched or like gotten their first $100 or $200, if they just have shown they've worked at really cool companies, have a lot of experience, you would still be interested in talking with them about their idea because you invest in early stage startups.
Yeah, I mean, the earlier you invest, like especially pre-seed, sometimes we've made bets where there wasn't a product, there definitely wasn't revenue. And so at that point, all you really are betting on is the person and the opportunity. And so it's important to feel like, hey, this is a person with a lot of potential.
Yeah. So
Yeah.
that's still so crazy to me that like people just off of showing their potential can get that much investment. But that's a whole nother story. That's
It's
a whole
a
nother story.
wild game.
I can't even
I
imagine.
do think it's crazy.
Somebody with
Yeah.
just amazing charisma and riz can just go in there and be like, yeah, la, 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 let's work.
Riz.
Let's keep going down the kind of like life cycle of a founder. So say this is a founder who has created their product and now they're going into their first VC pitch. What do you wish more first time founders knew before going into that first pitch with you?
Ultimately, when you're pitching investors, it's a bit of a dance. I think it's a balance of like how much information you're sharing, what you're going into the weeds about, what you're not. Ultimately, when you're pitching your storytelling, and so for me, the first call is to really get an understanding of who you are, why you're excited about this, and like honestly how it makes money. I mean, obviously it's a lot of pressure, right? Like it's your first time chatting with someone, you're excited, you want them to see your vision, you want the money, they maybe want to invest, you don't know. But I think the first thing you have to remember, before I even get into like do's and don'ts, investors are humans. We have good days, we have bad days, and um, typically you will see a lot of high energy on the calls, but sometimes we're having a really crappy day, and we don't mean that when we take calls. Or sometimes we could be excited about something, but it doesn't necessarily show on our faces. So I think sometimes founders are expecting to be able to
Yes.
read
Like
more
smile.
from an
Yeah.
investor. But you have to remember, like, VCs are people. We hear a lot of pitches throughout the week. And so just remember, we're human too. We have good moments, we have bad moments. So I would say that's the first thing. But do's and don'ts, I think, like, for your pitching, you have to remember that your first call, your storytelling. For me, this is my opportunity to kind of get to know you, understand maybe like this opportunity you found in the market, why you're excited about it, why I should get excited about it, and then ultimately how it makes money. I think, you know, being technical, when I first got into in venture, I used to be very wowed just by very cool technology. I'm like, oh my gosh, I could never build this. This is amazing. We have to invest. And my team would have to remind me, Lauren, it's still business. How does this make money? And I bring this up because I think sometimes when I talk to developers or technical people or people who are like, just working on different ideas, they go very quickly into what they're building, how hard it is, like this cool invention, but they forget that at the end of the day, a VC cares most about how this will make money so that they can return money to their LPs. And so really understanding and explaining that market opportunity, I think is, important, and also why you're the right person to be building this. And so that comes across by saying, well, in the past, I've built this, or in the past, I've grown teams X amount, or I've been able to scale companies to this amount of revenue. Like really showcasing why you are that person or giving yourself legitimacy is cool in meetings. I think another thing that sometimes founders forget is, especially if you're pitching a generalist investor at a generalist fund, our jobs are to be good at reading people and understanding opportunity, but we might not be subject matter experts in what you're pitching. uh, if it's technology or software, I have a lot more of a shot of knowing what you're building and what you're solving. But if it's something that's more niche or from a sector that I'm not familiar with or that I don't come from, I won't know all the abbreviations, or I might not know all the intricacies of that like market and the dynamics and how to sell to folks there. So um, also knowing that you probably are the expert on the call, and how important it is to be able to translate
Translate.
what
Yeah.
you're working on to someone who might not be an expert.
Without some context.
Ultimately, I think if you're a founder and you're pitching an investor, they should leave the call wanting to know more. So it's not like you've put everything out there, but you've done enough where their interest is piqued and that they want to have a second meeting.
Interesting. So you're saying founders shouldn't try to go for like the home run on the first call. It should be more just like an introduction, storytelling, just to get
Hmm.
the interest peaked for more calls.
Yeah. I mean, don't get me wrong, like go big or go home. Don't show up to the call late. Don't be like,
Yeah.
here's another investor. But I think it's very rare
Yeah.
that after a first call, an investor knows immediately that they're going to invest. Every now and then, like they might know immediately they're gonna pass, and you'll take a call because, like I said, we see a lot, and I can talk a little bit about the numbers, but you can kind of know after a first call if you want to move forward with setting up another conversation.
Yeah.
Um, but it's, I think it's a bit more rare after first call knowing
Hmm.
I am for sure writing a check. It happens. Don't get me wrong. There's
Of
definitely
course.
been
There's
calls.
outliers.
Yeah, there's definitely been times where I've sat down with someone and I was like, I get up and I'm like, I'm writing a check. Like I know for a fact. I'm like,
Well, hold on. Let's pause there for a second. So, like,
yeah.
what from those people? What kind of common traits or stories or industries or like what are the commonalities between some of those great scenarios, great experiences you met with founders? Is it just like somebody with a lot of energy who's great at translating a very complex topic? Is it somebody who's already got the traction and revenue? Like, what are have you seen as like the common things as the most successful founders?
There's some folks where you just kind of notice a specific sort of drive or passion or obsession with what they're building, and it's it's kind of like that they will figure whatever you give them out.
You've seen just like a lot of startups, so a
Hmm.
lot of founding teams. What skills, roles have you seen be like crucial almost to a successful startup? Whether it's like having a really, really good dev founder or a really good sales founder. Like, what are
Hmm.
the crucial roles you've seen that you need to really grow?
In the past, I think there was a need for having a really strong technical person
Yeah.
on your team, right? Because software is a lot harder to build. Now I get really excited about people who are really obsessed or have someone on their team who knows how to sell or like market or distribute. They say like first time founders focus a lot on product, second time founders focus a lot on distribution. And I think that's even more important today, especially because software isn't as challenging to build. I'm not saying it's easy, but it's definitely a lot
Yeah,
more accessible given all the resources out there.
absolutely.
So I think having someone who knows, either someone who knows how to sell or scale businesses, or someone who's very good at products, someone who might know this a specific industry really well and they're trying to sell into it, but they know kind of just like some of the pitfalls that others don't know or
Yeah,
have like that unique insight. I think those are skills that are really important. Um,
100%. Hmm.
I think those things, and then maybe soft skills more so folks who just know how to never give up, or people who are really persistent or have a lot of endurance. I think like those are some traits too. But mind
Yeah.
you, this is
Hmm.
all from an early
Yeah.
stage.
Yeah. Not like
Uh,
Series B. Yeah.
right, right. Because when you're getting later, the investors at those stages are looking at your growth and how you're growing month over month and just certain
Yeah.
milestones that you're hitting. So for me, what I'm looking at is a lot more on the person and how well they understand the market, other players in the market, etc. Like sometimes I take it as a bad sign if I'm like, oh, have you heard of these people? And they're like,
Yeah.
no.
Yeah.
And in my mind, it's like, well, so you haven't spent a lot of time here.
So you're a special case because you pivoted from computer science to becoming an investor in VC. What advice would you give to other people who want to pivot from their career to VC?
Yeah, it's so weird. I mean, a lot of people are like, "Oh, you don't see that a lot," and I now understand why. The longer you're in venture, the more you realize just the different, I think, skills that you use. So, being an engineer, it's a lot more technical. I think it's a lot more deep work.
Of
This
course.
job is very sales. So it's, you're completely different skill set. And so you have to be open to that change.
Yeah.
But
Yeah.
breaking into venture, there's so many resources I think out there, but the biggest thing to know is that it's network driven. So a lot of folks who want to get in, there's different ways. I think some people will say like, oh, if you want to get into investing, you're either an exited founder, so you might have built something yourself and it was pretty successful. You were able to sell it. You've got money and connections. And so now you're into venture. Some people say like writing about software and products and kind of going the journalism route. Before it was like B school was a really common avenue people would take. But ultimately, there's not a lot of this job. And so the way you get it is by networking. Especially because this is so network driven. Even when we're talking to founders and people are reaching out to me, I'm a lot more likely to review a pitch deck or talk to a founder that comes recommended from somebody in my network
Yeah.
versus someone who's just cold outbounding to me. Finding ways to meet other investors, I think is the best way to get into investing. And
Fair.
so how do you do that? You could do that maybe if you're like angel investing on the side, or you start sharing deals with other investors. The biggest thing is showing folks that you can find quality companies, and that you have a network. I think that's the biggest things for trying to get in.
It's a great insight, a great tip for sure. My last question, just because I feel like a lot of people are so far from the world, they don't really understand the dynamics of venture capital as an industry. Could you kind of just like explain LP, like the structure of things
Yeah.
and how things work, where you fit into it?
So this is kind of how most funds operate. So you'll have someone who's in charge of your fund called like the GP or general partner. And so they'll typically handle the relationships between LPs, the investors themselves, portfolio companies. They're kind of like the face of the fund, and they're also responsible for like fundraising. LPs, they're called limited. That stands for limited partners, and so limited meaning they only have so much impact with how the fund itself runs. But they're partners because we use their money to invest. So LPs are typically high net worth individuals or institutions such as pension funds or endowment funds or firefighter pension plans, etc. These large amounts of money that need to be managed, they come from limited partners, and so they will invest in a fund. And so let's say you are a high net worth individual and you say, hey, I've got $5 million that I want to give you, Lauren, to invest on my behalf. That would make you an LP into the fund that I'm running.
Okay.
So that's how LPs work. Then you've got investors. And so investors are people who work at the fund and are in charge of allocating capital to different opportunities. And so I'm an investor at my fund. I work under our GP. And so I find deals to invest in.
Yeah.
So that means I source them. I also will do the diligence for them. I will write memos about them, and then I will help afterwards when we write a check, and we'll do portfolio support. So all of those kind of responsibilities fall under like the investor kind of role. Most importantly, the reason we even have jobs are the founders. And so founders are a part of the portfolio. So every team, there's a founding team, but that is who we're investing in. That's who the investors spend time with. Those are the people who are building the companies. If you've got a big fund, like our fund, for example, we've invested in, actually at this point, I think over 50 teams. And so, the founders are who we invest in, who we work with, who we cheer on and support.
Mm.
But they're the whole reason that we even have a job. And I think at the end of the day, like they're the most important thing. So.
Yeah, which is so crazy to hear because it's like so many founders look at you as like, if we don't have the investor, we're cooked. So it's so crazy that you are valuing founders that highly because it is true. I mean, they make everything go around, but you guys are like the engine behind the growth for them. So that's always crazy to me to see that relationship dynamic.
It's a job, like to be an investor, and it's awesome. But at the end of the day, founders are the folks who are building the technology of tomorrow. They're the ones who visions that get people excited, who's gonna like impact society.
Fair.
They're the ones who make us more connected. Like, think about like Uber or Airbnb and like the impact they had. Obviously, of course, you needed investors who believed in them to give them capital to like keep going, but like you've got brilliance and passion and visions, and like they're the ones who are like creating the futures that we live in. And it's definitely an interesting ecosystem for how money is transferred from the LPs to the founders themselves. But
Yeah.
without founders, we don't. There's no point to having this job. Lastly, like a small aside,
Yeah.
LPs like to work with funds because it's a way for them to, kind of have another asset class that they're investing in outside of just like the market
Yeah.
or high
Real
yield
estate or
savings.
something.
Yeah, it's another asset class that typically could return just like higher returns. It's a bit more risky capital, but high risk, high reward.
Exactly.
And also LPs would not have the time otherwise to be
They're doing the due diligence on hundreds of
yeah,
deals.
yeah,
Exactly.
or like finding like the next Airbnb.
Yeah, yeah. I mean, a very motivating message for founders who are just like, maybe struggling and kind of
Yeah,
needing some passion and motivation. Definitely a
yeah,
great thing for them to hear, just like how important they are to the ecosystem of
yeah.
progression of just technology and society as a whole. I think it's really important for founders to understand whether or not they should try to get VC funding or to bootstrap. So, to founders dealing with that conflict, what do you say to them?
It could be a little bit of a controversial take, but I actually don't think most founders need to raise venture funding. Once you take venture money, it comes with just a certain set of expectations and obligations and strings that you wouldn't get from other sources of capital. I mean, ultimately, when you're dealing with investors, they're going to want to see growth at a certain rate. They might have you focusing on just like different priorities, how quickly you're scaling, what the product might look like, et cetera. So there's just different expectations when you come with venture funding, as well as loss of ownership. So, for a lot of folks, you actually could have better outcomes by building a successful business independently, or maybe taking on some angel investments from family and friends, versus kind of going through a much longer fundraising process. Because if you're taking venture money, typically for us, like early stage, we invest because we want our investment to be marked up, which means that we'd want to see like another round of funding. And anytime an investor comes in, they're going to want to see another round of funding. And every round you're going to be diluted a little bit more, a little bit more. And so, the contrary of this is hopefully you're building a business that is doing so well that, even having a smaller percentage still is super lucrative. But I think the stresses that come with just kind of appeasing your investors, how you're reporting, the expectations for growth, and how the product is headed, versus more ownership for entrepreneurs themselves is different. And I think investors can be helpful when it comes to maybe customer intros or other folks in the network, but there's other ways you can still get these resources as a builder too.
Yeah, 1,000% for sure. So I know you work with a lot of B2B companies. So with that being said, probably a lot of B2B startups are already gaining their first contracts or their first clients. So for you, you're basically saying if you're not trying to go for a billion or a world-changing idea, you really shouldn't even be trying to approach venture.
It
What's the
just
threshold of like, you know what, it's actually worth it for me to go to venture versus bootstrapping?
maybe if you have that you're building something that might be more capital intensive, so this could be maybe some sort of like hardware startups or things that might be more deep tech. Maybe if you are building something that requires, I don't know, maybe a lot of lab work or hiring expensive personnel to grow. That could be reasons. Like usually, what money does is just buy time and it buys runway.
Yeah.
So let's say you're trying to, you found a product and you built a product and now you're excited to just kind of like pour fuel on the flames when it comes to scaling that. That's a reason why people will raise venture money. Sometimes you want to hire top tech talent
Yeah.
because you've got like a pretty far out vision. That could be a reason why people raise money. Um, Things like that. But typically, if it's something where it's more capital intensive and not just tech wise, it could be maybe you're doing something with alternative farming and just like running those experiments is not cheap. Maybe it's you are creating some sort of like loan business and so you need like to be able to
Loan capital. Yeah, access capital.
extend loans. Yeah, you need some capital or to be able to get contracts with banks. There's different circumstances where you might need venture funding.
You majored in computer science. You worked at
Yeah.
Postmates. You worked at BlackRock. You worked at great companies where you're actually, software engineering. Obviously, vibe coding is the buzzword of the year. Everybody feels like they can just wake up and start coding. What message and advice do you have for people who want to get into coding that don't have the background and so they kind of feel like, oh, I can just go on Cursor, I can go on Replit, I can go on Codex, and I can build whatever. Like, what message do you have for those people?
If I was to go about trying to learn how to code
Yeah.
in 2025, I probably would be doing like some of the traditional data structures and algorithms book. I would understand system design and system thinking,
Yes.
but the biggest thing is to learn from other people who have been doing it longer. And so that looks like maybe that means joining a community of developers in your neighborhood. Maybe that's, hanging out online and asking folks. Maybe that if you're working at a company that has engineers, talking to them and like asking them questions themselves. But I think ultimately, if you can, you know, build, experiment, but then find ways to get input from other builders and engineers is kind of like what would push you forward.